So today we are going to talk about the next topic under Income Tax Act 1961, and the topic is income under the head capital gains. Income under the head capital gains. Okay. So till so far we have seen income from salary and income from house property. The next source of income is profits and gains from business or profession, which I will take up in the next as a next chapter. But now we are on in this particular session we are going to talk about income under the head capital gains. So this is Professor Ramesh Mehta from JSPM's Rajashri Sahu College of Engineering MBA department. Now let's talk about what is capital gain. What is capital gain? Okay. So Mr. X is there. He has a land in urban area in city, and he has purchased some 20 years back this land for 1 lakh rupees. Number one. So today in the year 2020, for example, he has sold it for some 5 crore rupees. Some 5 crore rupees. So he purchased this asset at 1 lakh rupees some 20 years back, and today he's selling for 5 crore rupees in the year 2020. So where there is a sale of asset, and subsequently if there is a profit, that profit is called as capital gain. So any profit from sale of capital asset is a capital gain. So I will give you one more example. With this you will understand it. So another example, let's take and discuss capital gain. Another example is, for example, Akshada Khadse has purchased some Infosys share in the year 2000 at 100 rupees. In the year 2000, she has purchased 100 shares at in the year 2000. Akshada Khadse has purchased 100 shares of Infosys at 100 rupees. 100 rupees. Today the market price of Infosys is some 5,000 rupees. Some 5,000 rupees. So she's now selling these shares in the previous year 2021. So in this particular sale of asset, there is a profit, or there can be a loss also. Okay, any profit or loss from the sale of an asset is a capital gain or a capital loss. It's a capital gain or a capital loss. So this is the second example. Let me give one more example. Like what we are discussing in under the head capital gains. Under the head capital gains. Another example is, for example, Siddesh is having a house, a flat. Siddesh is having a flat of which he has purchased in year 2000 for rupees for example, just a moment, okay, for rupees 2 lakhs, and this year, that is in the assessment financial year 2019-20, he is selling it for 50 lakhs. So some 20 years back he has purchased at 2 lakh rupees. Today he is selling it at 50 lakh rupees. So here, please remember, this is a only once in a blue moon transaction. Once in a blue moon transaction. This is not a business that he's doing it regularly, but he had an asset which he has purchased in the year 2000 for 2 lakh rupees. That is the cost price, and he's selling in the year 2020 for 50 lakh rupees. So there is an asset which was sold, and we have to find out whether there is a profit in this case or not. So if there is a profit, we call it as a capital gain. If there is a loss, we call it as a capital loss. So this is an example. Again, I will give you one more example. Just pay attention. So I have taken an example of land, building, and equity shares. Let me give you one more example. For example, uh, Akshi has purchased one uh, photo, a photo or antique piece. We call it antique piece. Antique piece means purana koi stamp, something like that. Okay, which she was fond of it. She purchased at some 100 rupees. 100 rupees. Today, the value of that antique piece is some 5 crores. So, some 20 years back, she purchased this antique piece at 100 rupees. She's selling now at 5 crore rupees. So, this is a one-time transaction, not a regular transaction. Regular transactions will come under business, and business we have to register. But this is not business. Business is a continual process. So, this is an asset. So we'll find what is the definition of asset in capital under the head capital gains. So this in this particular transaction, this is a stamp or an antique piece which she has purchased some 20 years back at 100 rupees. Today the value of this antique piece 5 crore rupees. So in this particular process, probably she might have made some profit, and that profit will come under the under the income tax purview of capital gains, and she has to pay tax. Short-term capital gain tax is 15%, and long-term capital gain tax is 20%. Now, there are two words. One is short-term capital gain, and one is long-term capital gain. So, all these definitions, concepts, we are going to talk about. We are going to look in the whole discussion of capital gains. So, this is the fourth example. If you have doubts still, you can just refer to some of the examples in the textbook. And we are going to take up so many examples in our discussion. Another example I will give you. For example, there is gold, and Mr. X has purchased gold at 200 rupees some time back. The value of this gold is some 50,000 rupees 20 years later. So now he has decided to sell the gold, this particular gold, because of money requirement. So out of this asset which he has sold, there may a capital gain. So that capital gain is going to be taxed under the head capital gain under Income Tax Act. So with this definition understanding, let's proceed into our topic. So now the first slide speaks about what is the basis on which I am going to charge long-term capital gain tax or short-term capital gain tax. Okay. Now, before I talk about this particular slide, I will give a small example. With this, we will understand what do you mean by long-term capital gain and short-term capital gain, and long-term capital asset and a short-term capital asset. So we have two types of assets under this particular head of income. One is long-term capital asset, and one is short-term capital asset. And if there is a profit from long-term capital asset, if there is a transfer of capital asset and there is a sale of capital asset, which is of the nature of long-term capital asset, and if there is a profit, that profit is called as long-term capital gain. And if there can be a loss also. It's not necessary every time there is a profit. It can be a loss transaction also. Then that such a loss is called as long-term capital loss. Now I will give the definition of long-term capital asset. Just wait for 2 minutes. Short-term capital asset. If you have sold an asset which is of short-term capital asset, and there is a outcome of two, either there is a short-term capital gain or a short-term capital loss. Now, please remember, on short-term capital gain, the tax rate flat is 15%, whereas in case of long-term capital gain, the tax rate is 20%. This is you have to remember. These rates are going to change from time to time. So you have to update. So to my knowledge, long-term capital gain, if there is a long-term capital gain, you have to pay tax of 20%. And if there is a short-term capital gain, then you have to pay 15% tax. So this is the point. Now you can ask me, sir, what is the definition of long-term capital asset? And what is the definition for short-term capital asset? So long-term means what? It is this particular property or asset is held for a longer period of time. And whereas in case of when I'm talking about short-term capital asset, the asset is held by the assessee for a very short duration of time. So this is long duration which is held, and this is short duration. Now you can ask me, sir, what is the definition? What exact meaning of long and short, long term and short term? It is 36 months and more, and in this case less than 36 months. Now what do you mean by 36 months? For example, I'm giving one example, just pay attention. For example, Mr. Siddesh Tiwari has purchased the building. Now he bought this building on 1/10/2019, 2018, sorry, and he has sold it on 1/10/2019. Now, if you look at the time gap within which he has purchased and sold, purchase date is 2018 and sale date is 2019. So exactly between this date and this date, there is a duration of 12 months. So as per the definition given by Income Tax Act 1961, if the asset is sold within 36 months, less than 36 months from the date of acquisition or date of purchase, then it is a short-term capital asset. Hope you have understood. This is very important. If the asset is sold within 36 months from the date of acquisition, then that type of an asset is called as short-term capital asset. Now let's talk about what do you mean by long-term capital asset. If, for example, in this case, I replace this 18 by 14. So he has bought this on 1/10/2014 and sold on 1/10/2019. So the duration is 5 years. That is 60 months. So in this case, as the asset is sold after 36 months from the date of acquisition, then this asset is called as a long-term capital asset. And if there is a profit from long-term capital asset, then there is we call it as long-term capital gain. If there is a loss from sale of capital asset, we tell that it is a long-term capital loss. Hope you have understood this point. So for understanding long-term capital gain and short-term capital gain, you have to find out the nature of the asset, for how much period of time it has been held. If it is held for less than 36 months before it is been sold off, then it is called as a short-term capital asset. And if it is sold after 36 months from the date of acquisition or the date of buying, then we call it as a long-term capital asset. Now, there is an exception to this definition. So please remember this particular exception. The exception is for land building and allied properties, 36 months, less than 36 months, it is a short-term capital asset, and greater than 36 months, it is a long-term capital asset. Whereas in case of shares, there are shares which are traded on stock market like Infosys, Satyam, Wipro, TCS, Reliance Industries, Tata Steel, Tata Motors. For this, the definition of long-term asset and capital assets, there is a small change. So if it is held for less than 12 months, then it is a short-term capital asset. And if it is held for 12 months, more than 12 months and sold, then it is a long-term capital asset. So for case of land, building, plant and machinery and allied assets, if the asset is held for less than 36 months before it is sold, it is called as a short-term capital asset. And subsequently, if it is held for more than 36 months for this kind of assets before the date of sale, if the period held is more than 36 months, it's a long term capital asset. But however, that there is a small change in the definition of long term and short term capital assets in case of securities traded on stock exchange, and one among them is shares. If the shares are bought and sold within 12 months from the date of acquisition, then it is a short term capital asset. If it is sold after 12 months, then that kind of a asset is called as a long term capital asset. And if there is a profit from this long term capital asset or a short term capital asset, then we call it as a short term capital gain or long term capital gain. So hope you have understood this particular point. So now the question comes, sir, when is long term capital gains comes into picture? When is that we are going to be charged long term capital gain or a short term capital gain or a capital gain? So if these four uh, conditions takes place, then there is a likelihood that you have to pay long term capital gain tax or short term capital gain tax, or there is a loss from long term capital loss or short term capital loss. The first and foremost, there should be a capital asset. So in these examples which I have told, one was land, one was building, one was plant and machinery, one was shares and securities, one was antique piece, and one was, if I remember, it was gold. So if there is a sale of a capital asset, then capital gain will come into picture. So first and foremost, there should be a capital gain, a capital asset in the example, in the transaction. So what is a capital asset? It can be a land, it can be a building, it can be a plant, it can be a machinery, it can be an antique piece, it can be bullion, it can be shares, or, and then we are going to talk about under the definition of capital assets, what are the assets which fall into the category or definition or purview of capital assets. So first and foremost, if I want to know whether I am going to pay long term capital gain or not, you have to find out what was the asset which was sold. If it is a capital asset which was sold, then you have to find long term capital asset or short term capital asset, and then compute long term capital gain or long term capital loss or short term capital gain or short term capital loss. Now, so there can be asset, but if it is not sold, there is no question of capital gain. For example, uh, Siddesh has one building, or flat of 50 lakh rupees. So it comes under the purview of capital asset. But he has not sold. He has held for 20 years or 30 years and he is not selling. There is no question of capital gain, because capital gain, any gain will arise only when there is a sale. When there is a sale only, there is a gain or a loss. If it's not selling or transferring, there is not at all a question of capital gain arising. So please remember, if the capital asset is transferred, if capital asset is transferred, then only we talk about computing capital gain. If capital asset is just hold, it has been held and is not sold, there is no question of capital gain or capital loss. For example, myself purchased some 1,000 shares of Infosys, but I am not selling it. So there is a capital asset, but I have not transferred, but neither I have sold. So there is no question of capital gain computation. Hope you have understood the second point. So capital asset should be there, and the capital asset must be transferred during a particular year. And because of this, we are going to compute compute long term capital gain or a long term capital loss, or a short term capital gain or a short term capital loss. Please remember one important word which is in this particular PPT, which is called as transfer. So this particular word is transfer, is called as sale. Please remember, in case of Income Tax Act 1961, under the chapter in capital gains, we don't use the word sale, but we use the word transfer. Transfer means sale. So hope you have understood the first point and the second point. Now the third point. When are you going to? When is the capital gain going to be computed? When there is a profit or loss. For example, 1 lakh rupees of stock or shares are sold for 50 lakh rupees. So there is a capital gain. 1 lakh rupees shares are sold for 10,000 rupees. So there is a loss. That is called as capital loss. So first and foremost, there should be a capital asset in the picture. That capital asset should be sold, which is called as transfer. On the subsequent sale of or transfer of the capital asset, there should be a capital gain or a capital loss. And last but not the least, very important, capital gain, whatever you have earned from the sale of transfer of capital assets, such capital gain should not be exempt under section 54, 54D, 54EC, 54FG, and all this stuff. So I will give you this example of 54. You can now take an example now. For example, Akshada Hude has purchased a building some 20 years back at 50,000 rupees. So 50,000 rupees is the purchase price or acquisition price. Today, she is selling this particular building for 2 crore rupees. 2 crores. So please remember there are how many zeros? 7 zeros in 2 crores. Now, 50,000 worth of capital asset, number one condition is fulfilled, is sold. So there is a transfer. Number two condition is satisfied. Number three, now we have to compute whether there is a capital gain or a capital loss. Now that computation is what we are going to discuss for another 10 sessions. And assuming there is a capital profit of 150 crores, 1 crore 50 lakhs, sorry, 1 crore 50 lakhs. Now, first and foremost, she has purchased in the year 2000 and selling it in the year 2020. And as per the definition, if it is sold after 3 years or 36 months from the date of acquisition, it is a long-term capital asset which has been sold. And this profit is called as long-term capital gain. This asset is called as a long-term capital gain. Now, on this long-term capital gain, Akshara Hude has to pay, as per the rules, 20% tax. 1 crore 50 lakhs के ऊपर 20% पे करना बोले तो 30 lakhs पे करना है, टैक्स पे करना है 30 lakhs. Now, is it possible to? Yes, it is possible, but our soul, our mind, our brain, our everything tells that why should I pay this much of tax? 30 lakh rupees tax, why should I pay? Now, is there a way that I get a exemption? Is there a way that I get an exemption? Yes. There is something called as section 54. In this case, where the profit what she made was 1 crore 50 lakhs, and on this she has to pay 20%, which is 30 lakhs. So naturally, she doesn't feel happy when she is paying 30 lakhs. Now she will ask a tax expert like me or anybody on this earth who is a tax consultant कि भैया मेरे को ये रास्ता बताओ कि 30 lakhs के मेरे को टैक्स पे नहीं करना है. So then in this case you have to refer to section 54, and so many other sections are there. But for the introductory day of this particular session, I am giving you one small example of 54. So in this case, the profit what she made, which is called as a capital gain, to the tune of 1 crore 50 lakhs, if she invests under section 54, invests in national REC bonds, and NHAI bonds. Now you can ask me, sir, what is REC bonds and NHAI bonds? REC bonds or NHAI bonds are bonds. I will give you the full form of REC. REC is Rural Electrification Corporation. Rural Electrification Corporation, and NHAI is National Highway Authority of India. Highway Authority of India. Highway Authority of India. Authority of India. Now, these are two Highway Authority of India. These two are government companies, and they see. Please remember, government is always encouraging investments in power, infrastructure, electrification, rural electrification, building up of infrastructure in the form of highways. And to build infrastructure like power or telecommunication or highways, the government of any particular country requires huge amount of money to be invested. And one of the ways of garnering these funds is bonds. They will issue bonds. Now, if you invest this 1 crore 50 lakh rupees in this particular bonds, then you need not pay tax on this 1 crore 50 lakhs of long term capital gain what you earned. So this is the way you get exemption from tax which you were supposed to pay on this 20% to the tune of 30 lakh rupees. So by investing your 1 crore 50 lakh rupees in NHA bonds or REC bonds, you get an exemption to the total amount of investments. And if you have invested a part of it, then the part of it will be exempted and the remaining part will be taxed. So this is the beauty of this particular chapter, that not only that you have to compute capital gains, but even you have to know the rules, the regulations, the exemptions under section 54, 54b, 54d, 54ec, 54f, and so on and so forth. So now you will ask me a question, sir. In this case, Akshada Hude has purchased this piece of land at 50,000 rupees, or building this at 50,000 rupees, sorry, but she is selling at some 2 crore rupees, and you're told that this is a long term capital gain because it is sold after 3 years. So we agree to it, because if it is sold after 3 years from the date of acquisition, it is a long term capital asset, and the profit what she makes is a long term capital gain. But however, you told that she has earned a profit of 150 crores, 1.5 crores, or 1 lakh, 1 crore 50 lakhs. But sir, if you look at this particular example carefully, this is not a profit of 1 crore 50 lakhs. If you subtract from 2 crores, 2 crores 50,000, it is 1 crore 99 lakhs 50,000. But why are you telling that there is a profit of only 1 crore 50 lakhs? So, sir, you have computed the long term capital gain, and you have computed wrongly. So, because this is not the long term capital gain, this should be the long term capital gain. My dear friends, there is a method of calculating long-term capital gain. I will give you a small example and hope that will be the last point of the introduction, and then we will go into the topic. So in this case, Akshada Bhude has purchased 50,000 rupees worth of a building or flat in the year 2000. In the year 2000. And she is selling this in the year 2000, 2020, that is first March 2020, for 2 crores, for 2 crores. Now on the face of it, you are telling that, sir, there is a profit of 1 crore 99 lakhs 50,000. No, dear friends, this is not the way you compute the long term capital gain. Please remember, this is the year in which it has been purchased, that is 2000, and the year it is sold is 2020. Now forget about this part. Now let's talk about this part of 50,000 rupees. Now, how do you find out long term capital gain? I'm giving you a very, very important formula, and this formula will be useful for you to compute long term capital gain. And please pay your whole and soul attention to this particular formula what I am going to derive. Okay, now let's pay. Now forget about this part and put your concentration on this, that is the date of acquisition. The acquisition year is 2000. 2000 में इन्होंने बिल्डिंग खरीदा था या फ्लैट खरीदा था 50,000 में. Okay, now at that time when we purchased this building in the year 2000, the consideration what I paid is 50,000. ये बिल्डिंग खरीदने के लिए 2000 में मेरे को कितना खर्चा हुआ? 50,000 में. लेकिन मैं कब बेच रहा हूं ये 2020 में, कितने में बेच रहा हूं? 2 crores में. आई एम सेलिंग दिस बिल्डिंग in the year 2020 at 2 crores after 20 years. So now disregard it, forget it, ignore it, and now let's concentrate on this point. तो 2000 में, year 2000 was the date on which this particular flat or building was purchased at 50,000 rupees. Now, at that time, assuming that the cement price is 100 rupees, at that time when the cement price is 100 rupees, you constructed that building with a cost of 50,000 rupees. तो ईयर 2000 में जब सीमेंट का भाव, सीमेंट क्यों लगता है? सीमेंट लगता है बिल्डिंग बनाने के लिए. सो इन द ईयर 2000 व्हेन द सीमेंट प्राइस वाज 1000 rupees, 100 rupees, अक्षदा खट से constructed at 50,000 rupees that particular building. Now she is selling this in the year 2020. Now the same building, if it is constructed in the year 2020, can you construct it at 50,000 rupees? No, not possible. Why? Because the cement prices are not the same which were earlier in the year 2000. In the year 2020, the cement prices have increased to for example, 500 rupees. Example, okay? Or 1000 rupees. The cement prices have increased tenfold. To construct the same building, the cement which is required is to be purchased at 1000 rupees. Now, assuming the cement price is 1000 rupees, to construct the same building which you have constructed in the year 2000, how much it will cost to construct the same building? So you have to cross multiply 50,000 into 100 by 100. Now this will be approximately 50 lakhs. Now after calculation, we have found out that if I construct this building in the year 2020, the cost of the building would have been 50 lakh rupees. And the same building which I have constructed in 2020, I am selling it for 2 crores. So thereby I am making a profit of 1 crore 50 lakhs. So please remember, this is the way you are going to compute long-term capital gain or short-term capital gain. This is called as indexation. This is called as indexation. There is another word now which has come, indexation. So how many words? Capital assets, capital gains, short-term capital asset, long-term capital asset, 36 months, 12 months, securities, land building, capital asset transfer. So many words are there. So again, I'm giving a small example. Let's take another example. Let's take another example. The example goes like this. The example is like this. Okay. For example, Mr. X has purchased a building in the year 1991 for rupees 5,000, 50,000. Okay. And the year 2020. Now you can ask me, sir, why you are using every time 2020? Because your problems are based on the year financial year 2019-20. Please remember this. That's the reason why I am emphasizing on this particular sale date. The sale year is 2019-20. Now she has purchased, Mr. X has purchased, sorry, in the year 1991 building of 50,000 rupees, and in the year 2020 the person has sold it for 5 crore rupees. Now you can ask me, sir, you are using big words. We are in big college, we are big students learning from big faculties, so our figures also are very big, and our Indian economy is also very big, so there can't be a transactions of hundreds and thousands. We talk about crores and billions only, and you should also inculcate that habit. Now let's talk about the, in this case, this particular asset is sold after 30 years, so obviously it is a long term capital asset. Now let's compute a long-term capital gain, because whenever there is a long-term capital asset, either it can be a long-term capital loss or a long-term capital gain. So we will find out this one. So here in this case, forget about this. Now talk about this 1991. When the cement prices in the 1991 were 50 rupees, 50 rupees. the house was constructed at 50,000 rupees. करेक्ट है ना? जब सीमेंट का भाव 50 रुपया था, हम लोगों ने आराम से 50,000 में बना दिया. लेकिन आज वही बिल्डिंग 2020 में, इफ आई वांट टू कंस्ट्रक्ट द सेम बिल्डिंग इन द ईयर 2020, is the cement price 50 rupees? No, the cost of inflation has increased. The inflation has increased and the cement prices have increased drastically to, for example, in this case, 1,000 rupees. So the same building, if I want to construct, can I purchase the cement at 50 rupees and can I construct in the year 2020? No, it's not possible. So I have to purchase the same building or construct the same building with an increased or inflated price because the input cost has increased, and one of the inputs is cement price. जब 50 rupees cement का price था, I could construct at 50,000 rupees. The same cement is costing me in the year 2020. What is this year 2020? Year of transfer at 1,000 rupees. I have to purchase this cement. So if I want to construct when the cement price is 1,000 rupees, the same building, then the cost is going to be high. It's almost 20 times because 50 rupees has increased to 20 times to 1,000 rupees. So how do I find out the cost of construction of the same building in the year 2020? That is the year of transfer. You have to cross multiply. So how do I cross multiply? Just pay attention. So it is, if I remember, I don't, I forgot just now. So 50 rupees was the cement price, and I could construct at 50,000 rupees. Now the cement price today is 1,000 rupees. So now if I want to construct this one, how do I find out this? So please remember, you have to just cross multiply. Cross multiply. That is 50,000 into 1,000 by 50 is equal to 1 crore. Sorry, it is 10 lakhs. So 10 lakhs worth of building. This building, if I am constructing in 2020, the cost of constructing this is 10 lakhs. Please remember, I am again reiterating one particular statement. If the same building is constructed in the year 2020, it would be costing me 20 lakh rupees, 10 lakh rupees, sorry. This 10 lakh rupees is sold, this 10 lakh rupees worth of building is sold in the same year, in the previous example, at 2 crores. So this is to be disregarded, and this comes into picture. The cost of construction is 10 lakh rupees and not 50,000 rupees. And this 10 lakh rupees of house is sold at 2 crore rupees. And thereby the difference is the long-term capital gain, which is 1 crore 90 lakhs. So how did I calculate this 10 lakhs? 50,000 into 1,000 by 50. Now, what is this 50,000? The cost price. The price at which I have purchased 20 years back into what is this? Inflation. Inflation बोले तो महंगाई. Inflation of 2020. And what is this 50 rupees? Inflation of 1991. So this is the long-term capital gain process or formula to be followed. So this is very important formula, but this is a crude formula. Okay, crude way I have explained. So this is called as the method or the formula for finding out long-term capital gain. So this is a rudimentary and this is the nascent way of understanding. This is the rudimentary way of understanding. This is the crude way of putting the formula. But this becomes the basis of constructing the formula for finding out long-term capital gain. So formula is cost of acquisition into inflation of 2019-20 and divided by inflation of 1991 financial year. So please remember this formula. This formula is very, 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 very important. And if you don't understand this formula, probably you will not understand the concept of calculating long-term capital gain. Hope you understood. But before that, I will explain once again this particular concept of finding out long-term capital gain formula. Okay, just a moment. I will give one more fun example, and we will find out the way to calculate and the way to find out the formula. Mr. Siddesh has purchased a building. Siddesh has purchased a building or a flat in the year 2010 for rupees 1 lakh. So this is the acquisition price or cost price. On the other hand, in the year 2020, he has sold it for 25 lakhs. 25 lakhs. Okay. Now, first and foremost, the first step is whether this is an asset or not. Yes, this is an asset. Building is an asset. Number one. Number two is you have to find out whether there is a sale or not. Yes, he has sold it. So there is a long-term capital. There is a capital asset which has been transferred. First step is over. Second step. Number three is what type of capital asset it is. Whether it is a short-term capital asset or a long-term capital asset. Whether it is a short-term capital asset or a long-term capital asset. So this is purchased in the year 2010 and sold in the year 2020. So obviously it is sold after 3 years or 36 months. So it is a long-term capital asset. So after this is over, now we will calculate what is the long-term capital gain. So I forgot it. 2010 was the year in which it was purchased for 2 lakh rupees, and he has sold it uh, for 2 lakhs, 25 lakhs in the year 2020. So the same problem I am taking. Okay, now let's look at the way of calculating the long-term capital gain. Now in this case, the cement at this on the in the year 2010 was some 500 rupees, and in the year 2020 the cement prices have become some 1500 rupees. So forget about this part. Now talk about this one. When the cement was 500 rupees in the year 2010, he could construct it for 2 lakh rupees, and he has sold it in the year 2020. Now the cement price at this point when he sold was 1500 rupees. So this is important, this is important, and this is important. Cement price in the year 2010, cement price in the year 2020, and the cost of constructing the building in the year 2010 when the cement price was 500. When the cement price was 500 rupees, he could construct it with 5 lakh 2 lakh rupees cost. But the same building which was sold in 2020, if it is built in the year 2020, then it would be costing more than this of 2 lakh rupees. Why? Because the cement price have increased to 1500 rupees. So how much will be the cost? So cross multiply it. So how we will get 2 lakhs into 1500 rupees by 1500 rupees, which will be 6 lakh rupees. So the same building, if it is constructed in the year 2020, is rupees 6 lakhs, which is sold in the same year for 25 lakh rupees, and thereby the profit is 19 lakh rupees. This is the long-term capital gain. Not 2 lakh rupees is sold at 25 lakh rupees and 23 lakhs is the long-term capital gain. No, because here we have to talk about inflation index in these 10 years, and the inflation index is to be taken into account, and then only we can solve the problem. So hope you have understood this. So here 2 lakhs into 1500 by 500 is the formula we have used. That is 6 lakh rupees is the 6 lakh rupees is the construction cost today. This is called as indexed cost of acquisition. This is called as indexed cost of acquisition, not cost of acquisition. Cost of acquisition was some 1 lakh rupees, if I remember, 2 lakh rupees. Now, what did I do? I have taken into account the inflation index, where the cement prices have increased from 500 to 1500 rupees. I have taken this calculation, and that's the reason it's not 2 lakh rupees which is coming, it's 6 lakh rupees, which is the cost of acquisition. The cost of acquisition is not 2 lakh rupees. The indexed cost of acquisition is 6 lakh rupees. So what is the formula for indexed cost of acquisition? So this is the formula. This is the formula, which is 2 lakh rupees into 1500 by 500. So what is 2 lakh rupees? This is cost of acquisition. What is 1500 rupees? Inflation of the year of transfer. ट्रांसफर कौन से ईयर में हम लोगों ने सेल किया? 2020 में. 2020 में महंगाई दर कितना था? और नीचे क्या था? इन्फ्लेशन ऑफ द ईयर ऑफ परचेज. सो द फॉर्मूला इज index cost of acquisition is equal to cost of acquisition into indexed cost of acquisition of the year of transfer by indexed cost of acquisition of the year of purchase. Hope you have understood. But I want to give you one more example and then we will stop about this discussion and further we'll take up new concepts. Because if you want to find out the capital gain, this is a formula and this formula is repeated throughout the chapter 100 times, 200 times. And if you don't know the formula and then you are walking in the darkness, that's the reason I am emphasizing on this formula. Let's take one more example. Example, in this case, Sakshi is there. Right? Sakshi. Sakshi has purchased Infosys shares in the year 1990 and she has purchased some shares of 5,000 rupees. 5,000 rupees का उनको कॉस्ट पड़ा. बोले तो पैसा गया 5,000 रुपया. Now she sold these shares in the year 2020 for 1 crore rupees because Infosys shares have increased by many times in this 30 years. So let's calculate long-term capital gain. First and foremost, we have to understand whether there is a capital asset or no. Yeah, or not. Yes, there is a capital asset, shares. So yes, it is there. Number two, is there a transfer or a sale? Then only capital gains have to be computed. Yes, Sakshi has sold for 1 crore rupees. She has sold for 1 crore rupees. Very good. 1 crore rupees. So there is a sale. Understood? Are you getting my voice? Next one. Next one is now whether it is a long-term capital asset or a short-term capital asset. So in case of shares, I told you if it is acquired and sold after 12 months. If it is acquired and sold after 12 months, it is a long-term capital asset. It is a long-term capital asset. It is a long-term capital asset. Yes, it is a long-term capital asset. Now we have to follow the fourth step. The fourth step is what is the long-term capital gain? What is the long-term capital gain? Let's compute the long-term capital gain with the given what do you call with the given data. Let's calculate. Yes, we will calculate that one also. The calculations are as follows. 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 Okay. Now she purchased this 5,000 rupees in the year 1990 and she has sold these shares in 2020. So in this particular duration, what has happened? The inflation for example, in case of 1990, the inflation was 100 rupees. Inflation is 100. बोले तो महंगाई दर 100 है और 2020 में महंगाई दर 1500 है. So we have to take into account this inflation also because the same shares, if they are purchased in the year of a sale or transfer, this can't be purchased at 500 rupees. It will be purchased at a higher rate, and the higher rate is going to be calculated. So indexed cost of acquisition is equal to cost of acquisition into cost of inflation index of the year of transfer by cost of inflation index of year of purchase or acquisition. So this is the formula. So here cost of acquisition is 5,000 rupees into 1,500 rupees by 500 rupees. Sorry, 100 rupees. So the result will be the indexed cost of acquisition. The result will be the indexed cost of acquisition. Hope you have understood this particular concept, which is called as indexed cost of acquisition. Next one. Now this is the way you have to compute. Now having understood this particular topic up to this stage, now there is a process of finding out the long-term capital asset. There is a process of finding out the long-term capital asset. The capital asset has to be found out, the long-term capital gain has to be found out by using this particular format. This particular format is very, 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 very important. And you can take the snapshot of this particular slide. Okay. So now let's talk about the format in which you have to solve the problem. This is a standard format, and this standard format can be followed, should be followed. The first is the sale consideration. The sale consideration. For example, in the previous example, we spoke about building being sold. The building is sold for example, 50 lakh rupees. So in the year 2020, the full value of the consideration or the sale consideration of the asset is 50 lakh rupees. 50 lakh रुपए बोले तो 2020 में एसएससी ने ये बिल्डिंग बेचा था 50 लाख रुपीस, तो 50 लाख रुपीस आया, तो ये इनकम हो गया, तो इसके ऊपर टैक्स पे करना है। लेकिन उसने परचेस भी किया है, परचेस किया तो उसका परचेस प्राइस कम करना पड़ेगा, एंड देन द रिजल्ट विल बी द लॉन्ग टर्म कैपिटल गेन. So we will reduce the cost of construction, the cost of purchase, and other costs. So the first cost is expenditure incurred wholly and exclusively with the transfer of capital asset. For example, brokerage paid to the broker, commission paid to the broker, advertisement given in a newspaper for the sale of an asset. So these are the expenditures which are incurred, and that expenditure has to be reduced. So I have sold this building for 50 lakh rupees, and I am paying to the broker and to the newspaper 2 lakh rupees as advertisement expenditure. So eventually, how much I will get? I am having an receipts of capital receipts of 48 lakh rupees or net sale consideration. We can call it as capital receipts, long-term capital receipts. Now, so this has to be taxed, but I have purchased it. So that purchase cost has to be reduced. And for reducing it, what should I do? I have to do indexed cost of acquisition. Already I told 4 or 5 problems. Indexed cost of acquisition is equal to cost of acquisition, very important formula, into inflation index of the year of transfer by inflation index of the year of purchase or acquisition. So after you compute this, you come to know, for example, 8 lakh rupees. And I will talk about the index cost of improvement as we move into the next few sessions. So for 8 lakh rupees of building was sold at 48 lakh rupees, and the profit is called as long-term capital gains of 40 lakh rupees. And on this 40 lakh rupees, you have to pay long-term capital gain tax of 20%, which is 8 lakh rupees. And assuming that you have invested this whole amount of 40 lakh rupees in, as I told you, NHIA bonds or REC bonds. NHIA means National Highway Authority of India bonds, and REC means Rural Electrification Corporation of India bonds. This 40 lakh rupees bonds में आपने पैसा पूरा का पूरा डाला. So you need not pay tax because whatever capital gain you got, you have invested the whole amount in the prescribed approved bonds of NHA and REC. Hence, you are getting an exemption to the tune of 40 lakh rupees what the capital gains you have invested. So this format has to be followed, and we are going to follow this format for all the problems which we are going to solve. So remember this particular format. You have understood this. Now you will ask me, sir, what is an capital asset? So I told you capital assets are land, building, plant and machinery, furniture, and shares and securities. But the Income Tax Act 1961 has given a precise definition of capital assets. So capital assets are the basis on which I am going to pay capital gain tax, or I will find out whether it is a long-term capital asset or a short-term capital asset or a long-term capital gain or a short-term capital gain. If there is no question of capital asset, there is no question of capital asset being sold. So we have to understand the definition of capital asset. So the definition of capital assets are like this. Capital assets means property of any kind: land, building, shares, gold, etc., etc. Whether or not connected with the business, but it should not include. But the following are not capital assets. Okay, for example, any stock in trade. For example, you go to the kirana shop. There is a lot of kirana. That kirana is not a capital asset. Why? Because it is a closing stock, and closing stock is not a asset. Number one. Number two, पर्सनल इफेक्ट. पर्सनल इफेक्ट, जैसे कि पर्सनल कुछ रहता है, पर्सनल इफेक्ट लाइक मोल प्रॉपर्टी for by the SSC or member dependent on him. These are not personal. However, the following assets cannot be categorized as personal effects. ये जो following ये capital assets है, they are not personal. Like jewelry, जैसे कि डायमंड खरीदा 1,000 रुपये में 50 साल के पहले, कोयरू का डायमंड है, किसके पास? साक्षी के पास. 1,000 रुपये में खरीदा था, आज उसका वैल्यू 500 करोड़, और ये बोले कि सर ये मेरा पर्सनल इफेक्ट है. नो, the Income Tax Act 1961 has given a clear cut definition of personal effect, and the personal effect doesn't include jewelry or archaeological collections or drawings. Mona Lisa drawings are not personal effects. जैसे कि मोनालिसा का एक ड्राइंग है जो 500 रुपये में अक्षदा खड़से ने खरीदा था, आज उसका भाव है 5 करोड़ और आज बेच रही है, एंड शी इज मेकिंग अ ग्रैंड लमसम लॉन्ग टर्म कैपिटल गेन, and she will tell, sir, this is my personal effect. No, this doesn't come under the purview of capital assets. Personal effect, it is a capital asset. So hope you have understood all this. Next one, the C category. The C category is doesn't include में आ रहा है ये B C. ये C अभी we are talking about rural agriculture land. अभी रूरल में कोई इन्वेस्ट नहीं करता है. Nobody is interested in investing in agriculture land in rural or village, and that's the reason why our agriculture is in problem. So the government encourages to invest in agriculture lands in rural areas. So this type of agriculture lands are not capital assets. Please remember this. The point is very important. Within municipal limits and population less than 10,000. For example, Sakshi is there and she has purchased in a village, in a village, a building, a land, sorry, agriculture land, and this village is having less than 10,000 population, and this is within the municipal limits. Then this is not a capital asset. In the same way, if outside municipal limits, at least 8 kilometers. So these are the definitions. Okay. Now D, another one which is not a capital asset, does not include में आ रहा है 7% gold bonds, 6.5% gold bonds of gold capital gold scheme account बोल के है. So this also we are not going to talk much about it, but you have to remember these are not capital assets, because in the examination they will ask you what, give the definition of capital asset. So this definition has to be there in the answer. So 7% gold bonds, 6.5% gold bonds, bearer bonds issued by central government, gold deposit bonds which were issued in 1999. So these are not capital assets. Now let's take a small example. The example is like this, and we'll find out whether it is a capital asset and all that stuff. Mr. S. Ramesh Kumar Mehta purchased a residential building in January 2017 at 84 lakhs, and he sold the house in 2019 April for 90 lakhs. So what is the duration? Nearly 2 years. So this is a building. For building, what is the definition? If it is sold after 36 months, long-term capital asset. If it is sold within 36 months, short-term capital asset. So this is a case of short-term capital asset. Within 2 years, he has sold. In this case, the residential house property is a capital asset. Yes, it is a capital asset of Mr. Kumar, and hence the gain is rupees 6 lakhs arising on account of sale of residential house property will be charged on tax under short-term capital gain. Now I will give you some more important points of this particular problem. Very important points, and you have to remember this. Okay, let's talk about some more points under this particular topic, under this particular numerical illustration. So first and foremost, it is a building. It is a capital asset. Within 2 years, he has sold. So it is a short-term capital asset. And please remember, for God's sake, short-term capital asset, there is a simple way of calculating the short-term capital asset. There is nothing called as indexation. आपको इसमें short-term capital asset में indexation नहीं करना है. Please, I am repeating this particular point. In case of short-term capital gain, no calculation of indexation. No calculation of indexation in case of short-term capital asset. Whenever there is a capital asset which is sold and there is a short-term capital asset which is sold, there is no question of indexation. Now, what do you mean by no question of indexation? So let's understand. No, what do you mean by no question of indexation? Means now, please remember this guy has purchased at 84 lakhs and he has sold it for 90 lakhs. And what type of asset it is? Short-term capital asset. Within 36 months he has sold. And what is the capital gain? It is a short-term capital gain. Now, short-term capital gain, how is it find out? How much is the short-term capital gain? How is to be computed? 90 lakhs is the sale price and 84 lakhs is the purchase price. Whatever is the difference is 6 lakh rupees is the short-term capital gain. So hope you have understood it. एंड देयर इज नो क्वेश्चन ऑफ इंडेक्सेशन. आपको फार्मूला यूज नहीं करना है जैसा कि महंगाई कितना था, महंगाई इतना था, उतना है, इतना है, इंडेक्स कॉस्ट ऑफ एक्विजिशन इज इक्वल टू कॉस्ट ऑफ एक्विजिशन इनटू इन्फ्लेशन ऑफ द ईयर ऑफ ट्रांसफर बाय ईयर ऑफ inflation, so on and so forth. That formula is not to be used. Whenever there is a short-term capital asset which is sold, no question of indexation. Straight away, if you want to find out short-term capital gain, by God's grace, you will reduce the headache. And the simple formula is selling price minus cost price. So how much it is? 6 lakh rupees. So on this 6 lakh rupees, you have to pay tax. On the what type of tax it is? As the asset is a short-term capital asset, and the profit is a short-term capital gain, you have to pay short-term capital gain tax at the rate of 15%. How much? 15%. On 6 lakh rupees, you have to pay 15%, which is 90,000 rupees. So you will ask me, sir, is there a way can I invest this 6 lakh rupees in NHA bonds and REC bonds or any exemption is there? No, there is no exemption. And whenever there is a short-term capital gain, there is no exemption you will get, like 54 or 54 EC, etc., etc. You have to pay tax on this 6 lakh rupees 15%. So long-term capital gain, yes, you can get exemptions under 54, 54B and all that stuff. In case of short-term capital gain, no question of exemptions under section 54 and so on. So hope this particular illustration also is informative and you got a lot of understanding. Now let's take about what do you mean by capital. How many types of capital assets are there? So already we have already spoken that there are two types of capital assets. There are two types of capital assets. One is short-term capital asset and one is long-term capital asset. One is short-term capital asset and one is long-term capital asset. Now, what do you mean by capital asset? Long-term, if it is sold within 36 months, if it is sold, this one, if short-term capital asset is sold within 36 months or less than 36 months from the date of purchase, then it is a short-term capital asset. If when I'm talking about long-term capital asset, an asset which is not a short-term capital asset is a long-term capital asset, or if it is sold after 36 months from the date of acquisition, 3 years of acquisition, 3 years after acquisition, it is a long-term capital asset. However, in case, so note or hint or one exemption, one exclusion to this particular definition. In case of shares which are traded on stock exchange, like equity shares, preference shares, or any other securities which are traded on recognized stock exchange, like National Stock Exchange or Bombay Stock Exchange, or any regional stock exchange like Pune Stock Exchange, Hyderabad Stock Exchange, Jaipur Stock Exchange, or Coimbatore Stock Exchange. Units of UTI, that is mutual fund or zero coupon bond. For this, it's not 36 months, even though this is a capital asset, but in this case, it is reduced to 12 months. That is, if shares are purchased and sold after 12 months, then it is a long-term capital asset. If it is sold less than 12 months after the date of acquisition, then it is a short-term capital asset. Hope you have understood the definition of capital asset, short-term capital asset, and a long-term capital assets. This is a very important slide. You can take a snapshot of this particular video, of this particular slide. And remember, I am going to insert all these recorded sessions on the YouTube. You can watch on the YouTube. But remember, I have uploaded 3 problems on income from house property. That's the reason I am taking a new chapter, income from capital gains. So these 3 incomes from house properties, you have to go and visit my YouTube video. Yes, Ramesh Kumar Mehta. Download it and go through the videos. Next one. Now let's understand whether it is a short-term capital asset or a long-term capital asset. This particular problem. Mr. S. Ramesh Kumar Mehta is a salaried employee, and in the month of April 2011, he purchased a piece of land and sold it in the year 2019. So the duration is almost more than 8 years. 8 years means 8 years into 12 months, each 96 months. So it is sold after 36 months. So it is a long-term capital asset. In this case, the land is a capital asset. Yes, he purchased the land in the year 2010 and sold it in 2019. And this is not 24, sorry, it is 36. So it is sold after 36 months, and it is this land will be treated as long-term capital asset. And in this transaction, if there is a profit, then it is a long-term capital profit, that is long-term capital gain. If there is a loss, it will be a long-term capital loss. Now, after we have understood what is long-term capital asset and what is long-term short-term capital asset, now it's time to understand whether it is a short-term capital gain or a long-term capital gain. What is the definition of long-term capital gain and what is the definition of short-term capital gain? If on transfer of see, I am using the word transfer, not sale. So sale means transfer only. Okay. So on the sale of capital, long-term capital asset, it is a long-term capital gain. On the sale of a short-term capital asset, it is a short-term capital gain. Okay. तो शॉर्ट टर्म कैपिटल एसेट को बेचा तो शॉर्ट टर्म कैपिटल गेन आएगा, लॉन्ग टर्म कैपिटल एसेट को बेचा तो लॉन्ग टर्म कैपिटल गेन आएगा. सिंपल एंड स्ट्रेट एंड स्वीट एंड नो कंफ्यूजन. The need for such distinction is because why I have to distinguish between short-term capital gain and long-term capital gain. Short-term capital gain is taxed at 15% or at normal rate, whereas long-term capital gain is taxed at a very high rate of 20%. So please, if there are some changes, you can let me know the taxation rate of short-term capital gain and the long-term capital gain. What is the taxation rate? So from my exploring the Income Tax Act, I came to know that long-term capital gain tax is 20%. Now, the very important definition. Now, what is transfer? I told you, when there is a sale only, we have to compute whether it is an asset or a long-term capital asset or a long-term capital gain. When there is no sale, there is no question of transfer, and there is no question of computing long-term capital gain or a short-term capital gain. So let me give a small example. Why we have to understand the definition of transfer. Transfer means sale. तो sale कब हुआ? Sale का मतलब क्या है? What are the things which will come under the purview of sale? So, for example, my father is there, Mr. Mehta, Mr. N. Mehta, N.S. Mehta. N.S. Mehta has purchased a building in 1990, and in the year 2015, he has gifted this property to me because I am his son. So it is transferred in my name. So is he selling this asset? No, he's not selling this asset. Why? Because it is transferred from father to son or gifted from father to son, and the son is getting by virtue of inheritance. So there is no question of Mr. N.S. Mehta selling the house property to his son. So sometimes it is not transfer. So you have to clearly identify the transactions which are transfer or sale and identify some transactions which are not sale, and you have to, based upon this, you have to find out the long term capital gain or a short term capital gain, and so on and so forth. For example, Mr. X is there. He transferred the house property in the name of Mrs. X. So there is no transfer. Please remember this. This is very important. Assuming that you are transferring, you thought like this is a transfer, and you are asking to compute a capital gain, and then you are talking to him to pay tax. This is wrong. Absolutely wrong. You can't tax him because there is no question of sale, because there is a just a transfer from of name of a house property from Mr. X to Mrs. X. So this is not a sale, and this is not a question of transfer. So what do you mean by transfer? What do you mean by the definition of transfer under capital gain under section 2 of section 247? So the definition of transfer goes like this. सेल, सेल किया, मिस्टर एक्स ने किसको सेल किया? हिज फ्रेंड को सेल किया. सो दिस इज ए सेल. एक्सचेंज इज ए सेल. रिलिक्विशमेंट बोले तो गिविंग अप और रिनाउंसिंग is called as relinquishment. Extinguishment also is renouncing. Compulsory acquisition under law is a transfer. I will not go into the explanation. Just you remember it, because it's you are required to remember, and as and when you get experience, you will understand it. Allowing enjoyment of immovable property, allowing possession under Transfer of Property Act 1882. Personal effects converted into stock on in trade, or the examples of transfer, or the definitions of transfer. Next one is computation of capital gain. So we have to compute capital gain, which is short-term capital gain, and one is long-term capital gain. I showed you the format also, if you remember. This is the format of computation of long-term capital gain and short-term capital gain. So this is the computation of a long-term capital gain, and this is the computation of short-term capital gain. So long-term capital gain, this is the way you have to find out the long-term capital gain. And if you want to find out the short-term capital gain, I told you there is no question of indexation. You have to just minus from the selling price, cost price. So hope you have understood up to this stage. Now, so this is about the definition of long-term, short-term capital gain and long-term capital gain. Aishu, next one is period of holding. This is very important. Period of holding. Very important. For example, I told you that my father is there, Mr. N.S. Mehta, and he has purchased a piece of land in 1990. He transferred this property in my hand in the year 2018, and that is Mr. S. Ramesh Kumar Mehta. Now, Mr. S. Ramesh Kumar Mehta is a person who is is thinking of selling this house property, and he has sold it in 2020. And he has sold it in the year 2020. Now, this is a very tricky situation. This is a very complicated situation, whether it is a long-term capital asset or a short-term capital asset. क्यों बोले तो अगर इधर कैलकुलेट करेंगे तो शॉर्ट टर्म लॉन्ग टर्म कैपिटल एसेट है, अगर इधर से इधर करेंगे तो शॉर्ट टर्म कैपिटल एसेट है. तो क्या है ये, वेदर इट इज ए केस ऑफ ए लॉन्ग टर्म कैपिटल एसेट बीइंग सोल्ड और a short term capital asset which is being sold. And that's the reason why the period of holding is very, very important. Period of holding. So in this case, when the father has transferred this house property from Mr. Father to son, and son selling within 2 years, the duration has to be calculated from this to this and not from this to this, because of the provisions of Income Tax Act 1961. So the period of holding for which the asset was held by the assessee together with the period of the ownership by the previous holder. Who was the previous holder? N. Ramesh Kumar father, NS Mehta. So from this onwards, it has to be considered till this point of sale, not from this point 2018 to 2020. So the total period for which the asset was held by the assessee together with the period of ownership by the previous holder. So previous holder कब से acquire किया था 1990 से 2018 20 years plus uh, the assessee. Who is assessee? Assessee is the person who has sold it. Who is Ramesh Mehta? That is 2 years. 28 years plus 2 years is 30 years. So this is the way you have to find out the period of holding. Now this is very important slide. This is very important slide. Before I go into this slide, I will show you one small important table. This is the table. You can take a snapshot. You can take a snapshot of this particular slide. So I will give you a small example why this slide is very important. Very important. Okay. So cost. I told you about cost of inflation index. So this is the table of cost of inflation index, which is the one which has been prescribed by Income Tax Act 1961, Finance Act, not by me or you. ये आपको फॉलो करना है. गवर्नमेंट ऑफ इंडिया इनकम टैक्स डिपार्टमेंट ने कॉस्ट ऑफ इन्फ्लेशन इंडेक्स को रिलीज किया है. It's not by me or by you. It is prescribed by higher authorities or appropriate authorities. I will give you a small example. I want to explain all this. Before I explain this, I have to explain this particular point. This particular point I have to explain. So that's the reason I am sharing this slide and explaining share this slide with you. So please pay attention. You can take a snapshot or a photo of this slide, or you can explore on Google. You will get to know about this particular slide you will come across. And remember, you need not remember all this stuff. Shall I remember all this stuff? No, don't remember. Don't remember. Do not remember this headache. It's humanly not possible to remember all this stuff. I will give you, or in the examination, this data will be furnished. So please don't remember this one. Ignore it. Ignore it. But you need to have an understanding of this particular table. Okay, hope you understood. So let me give a small example, numerical example, and then we are going to talk at length about this particular topic. Okay, just wait. Now the inflation index was started computing, or the government of India started computing cost of inflation index previously from 1981-82. But from some certain time previously, this has been changed to base year as 2001 2002. Previously the base year was 1981-82. This is now not in picture, but the base year has been changed from 2001 to 2002. From 2001 to 2002. This is, so the base year is the year which is the base, and the base year is 2001 2002, number one. And 2002, 2003, 2003, 4, 5, 6 financial years. Okay, these are all financial years. Financial years. So up to this you got. Okay, and you will be using this particular this one. This is the 2019-20 cost of inflation index. This is the cost of inflation index of 2019-20, 18-19, so on and so forth. So let's give a small example here, and how this is very useful. How this is very table is very useful. Please remember, need not by heart this table. No question. You should not, because I am going to, humanly it is not possible to remember. Okay, let's do the problem. For example, Mr. Tiwari ji, Siddesh has purchased one building on 1/8/2006 1/8/2006 for rupees 2 lakhs. Okay, in the year 1920 he sold it for 25 lakhs. He has sold it for 25 lakhs. Okay. Now, this is the basic information which was given to you, and you have to find out whether there is a capital asset, number one, number two, what type of capital asset, number three, number four, whether there was a sale, number four, what is the total long-term or short-term capital gain or loss. Okay, so let's calculate. बिल्डिंग कैपिटल एसेट है, यस. इसने बेचा क्या? हाँ बेचा. किसको बेचा? किसी को तो बेचा है, तो इट इज ए ट्रांसफर. सो टू कंडीशंस आर फुलफिल. इसने कब बेचा? 2020 में. कब खरीदा? 2006 में. तो हाउ मेनी इयर्स आर देयर? 14 years. For what type of asset? Long term capital asset. Now when there is a long term capital asset, certainly there are two things: long term capital gain or long term capital loss. So we will find out whether there is a long term capital gain or a long term capital loss. Now I told you the formula for indexed cost of acquisition. Okay, forget about that. So when did he purchase? On 1/8/2006. तो 1/8/2006 किस में आ जाएगा? मेरे ख्याल से इसमें आएगा. अग्रीड? यस अग्रीड. कब बेचा इसने? 1920 को. सो फॉर एग्जांपल 1/8/2019 में बेचा. सो इट विल कम इन दिस वन. तो आपको ये सब याद रखने की क्या जरूरत है? ये सब याद रखने की जरूरत नहीं है. ओके, सो this one data, this two data, this three data, and this four data are required. Now, when the cement price was 122 rupees, so what is the cement price? This one was 122 rupees. He constructed the building at 2 lakh rupees. Now, when the cement price is 289 rupees, he has sold it. If the same building was constructed in this year, it would have costed him 289 rupees of cement. जब 289 rupees में सीमेंट मिल रहा है, उस टाइम में बेचा है, तो उस ईयर में अगर कंस्ट्रक्शन करेगा तो what would be the cost of it? So I am repeating once again. When the cement price was 122 rupees, he constructed the house or building at 2 lakh rupees. If the same house, if it is built in the year 2019-20, that is the year of transfer or sale, he would have constructed by using a cement of 289 rupees. So at 122 rupees of cement, he could build in 2 lakh rupees. If the same building is constructed when the cement is 280 rupees, can he build at what price he could have built? So you have to cross multiply. So 2 lakhs and into 289 by 122. So that would be the cost price if the same building is constructed in the year 2019-20, which is the year in which it has been transferred or sold. So why I did this? Because I told you whenever there is a long-term capital gain, you have to do indexation. You have to do indexation. This I'm highlighting. This has to be done. Whereas in case of short-term capital asset, you should not do indexation. Indexation will be done only for long-term capital asset. So how did I do indexation? So indexation is 2 lakhs into 289 into 122. That is, what is this 2 lakhs? Cost of acquisition. अपने तिवारी भैया सिद्धेश ने 2 lakhs में खरीदा था. That is cost of acquisition or purchase into 289 क्या है? 289. ये 289 है. If you look, what is 289? 289 is cost of inflation index. Cost of inflation index. कौन से साल का? Of the year of transfer. Of the year of transfer. That is sale. कौन से साल में sale? Sorry, 289. Okay, this is 289. Okay, so CII is 289, the year of transfer. By what is 122? 122 is the cost of inflation index. Cost of inflation index of the year of purchase. Cost of inflation index of year of acquisition or purchase. So please remember, indexed cost of acquisition is equal to cost of acquisition into cost of inflation index of the year of transfer by cost of inflation index of the year of acquisition. This is a important formula. I told this a sixth time or seventh time. So if you calculate, you will get the figure 2 lakhs into 289 by 122. You may get around, example, you may get around 5 lakh rupees. So this is the acquisition price. And what price he has sold? He has sold for 20 lakh rupees. So 5 lakh rupees is the index cost of purchase and is sold it for 2 lakh rupees. So there is a long-term capital gain of 15 lakh rupees. So this is the importance of this particular table. This is the importance of this particular table. Hope this table is understood by you. You need not remember, but you should know that there is a table called as cost of inflation index under Income Tax Act 1961, whose base year is previously it was 1981-82, but some years back this financial year base year or the base year as the base year of cost of inflation index has changed from 2001 to 2001 and 2002. So hope you have understood. So I am putting forth the important formula for your kind consideration, how to find out the cost of acquisition. So this is the indexed cost of acquisition. The formula, just now I told you the formula. Just now I told you the formula. If you remember, the same formula was used. You remember 2 lakhs, just now, 1 minute back, 2 lakhs into some 289 by 122. The same formula was used. The same formula was used. The same formula is used. So indexed cost of the indexed cost of acquisition, the indexed cost of acquisition is given by the formula cost of acquisition, which was 2 lakh rupees, into cost of inflation index in which it was sold, that is 2019-20, it is 289, and 2006-2007, I remember to my knowledge it was 122. So it's very difficult to remember all these figures. It will be given in the examination, but this formula will not be given. This formula will not be given in the examination. So hope you have understood the most important part of our discussion, which is interest cost of acquisition, and the formula you have to remember, you have to by heart, and you need not by heart because I gave you the logic also, and hope you have understood it. And now it's 1 o'clock. If you have any doubts, you can let me know. Just a moment, wait patiently, and